Hello, guys. Listen, today is Friday, November 16th, 2018. There's been two very important developments that have happened that are going to affect the financial system coming up. One has to do with things that have happened with Italy, and the other has to do with Great Britain, the United Kingdom. I'm going to have to do a show on it, a full show on it, probably either later today or early tomorrow. Things are developing very rapidly in these two situations with Italy and with England, the European Union, and along with the European Union, it's going to have could have devastating effects on the actual European Union itself. Okay, so let's get into the markets, and let's talk about what's going on with the markets. Let's open up the charts right here. First thing we're going to take a look at is cryptocurrency. You know, it took an awful beating yesterday. The cryptocurrency's down to 55.61, 55.57 right now. Let's pull back on the chart here and take a look. We see ever since it took that beating, it's kind of been going along sideways. Okay, let me see. If we go to the 30-minute, we can kind of see this waterfall event. It took it down from mid-60s down into the mid-50s. It's like a $1,000 drop. Bang. Just boom, there. And it hasn't recovered. Now let's take a look at cryptocurrency market capitalizations. $184 billion, 52.8% Bitcoin dominance. Some of these numbers are going back into the green a little bit, but they're not really going up that much, and the market cap hasn't really climbed back that much. It's still down to $184 billion. Let's take a look at the Dow Jones this morning. She was a little bit lower a minute ago. She's come up a little bit. She's back up to down 51 points for the day. This, honest to God, I'll tell you what it looks like to me. It almost looks like a guy walking out onto the edge of a diving board. That's what it's doing right now. As it's going out this way, right? It's almost like a guy walking to the edge of a diving board. Now, that's just an analogy, what I see it doing. But I mean, anyway, that's what's going on with the Dow. Oh, the price of the Dow, 25,238. Okay, so it's down 51 points right now, right this minute. That's not no big time down or anything, but if this thing falls, it's going to fall a long way, because there's not a lot of real strong support as this thing can't break through. You know what I mean? Like, I'm going to tell you, you saw how quick and easy Bitcoin broke through support. We thought we had strong support, right? It broke right through that support level of around $6,000. This market can do that just as easily. Just as easily it can break down through support. Okay, so let's move on here. Let's take a look at Sweet Light Crude. It seems like the bleeding has stopped on Sweet Light Crude for now. For now, the bleeding has stopped. She's up 98 cents on the day, 1.74%. Back up to $57.44, you know. But I don't know. I just got the feeling that because of this global slowdown, that there might be a little bit more bleeding to come yet in oil. You know, but oil, this is a bad shock to the financial system, the fact that oil's fell so far so fast, you know. Let's take a look at the silver price today. Okay, what we see the silver price has been lifted up a little bit from the terrible lows that it was. It's up about almost 50 cents from its really low lows, you know. It's really low lows here. We were down below $13.90. We were down like $13.88 or something like that. Okay? About $13.88. Now we're all the way up to $14.36. feels a little bit better. It's just, it's taking that edge off a little bit, but we could use it to really go up an awful lot more. Silver is so undervalued, even at $14.36. So now let's take a look at gold. See what gold's doing today. Gold is $1,223.30. It's up $10.30. Now, gold's took a good little jump here. Silver hasn't quite followed today, and the thing is that reflects, whenever that happens, that reflects on the gold to silver ratio, which right now is totally skewed. It's at one of the times in history, just a few times in history this has happened. Doesn't happen very often, where the gold to silver ratio gets out of whack. Now, when the gold to silver ratio goes too low the other way, it gets a little bit out of whack. But right now it's out of whack. It's out of whack. It's too high. It's like 80 something. It's like ridiculously high right now. It's only been 3 points in history ever where it's been this high. It never lasts long. It never lasts long. So if you're one of these guys who are looking for a gold to silver ratio where silver is really undervalued compared to gold, there's only 3 times in history, and it never lasts long, and we're in one of those times right now. So this is a very, very special time right now to make yourself wealthy on silver. Because the gold to silver ratio is so skewed. It's going to bounce back. It's definitely going to bounce back, and when it bounces back, gold price is not going to stay static. It's way low, too. Wow, I mean, what can I say? Bonds to rates right now. I'll tell you what I can say. No, I'll tell you what I can say. I can say that all these people who think that U.S. Treasuries are the biggest safe haven, best safe haven asset, I'm going to tell you the United States is so deep in debt that it's never going to dig its head out. And the U.S. Treasuries are linked to that debt. Okay? Gold is a real safe haven asset, the ultimate safe haven asset. It always has been the Earth's ultimate safe haven asset, not U.S. Treasuries. And it's always going to be, for crying out loud. That's what I got to say. Okay, anyway, here we go. U.S. Treasuries. U.S. Treasuries are down from what they have been. I mean, let's take a look at the U.S. 10-year right here. It has been all the way up to almost 3.25. It's dropped down. I mean, it's not quite as high as it has been, but we're going to have to chart it here to really give you an idea. We're going to have to chart the U.S. 10-year. There's no other way to really give you an idea of where it is in comparison to what it's doing. To take a look at this chart. Let's get a close look at the U.S. 10-year here. And what we can see is it has been a few little peaks, a little bit higher than it is right now. But look at the ultimate. You got to kind of draw a line from back here all the way up to here, and we can see a steady motion upwards. And that we have not broken through that trend of that steady motion upwards. We've had a few dips down, and we're in one of those dips down right now. Down to 309, but we have not broken that trend of an upward trend that we're in, and we're going to continue. So right now we're in one of the dips, so we've probably just about bottomed out in this dip right now. So look for a motion upwards in the U.S. Treasury. I expect it to trend upwards any time now, because if it continued on this dip and it went down too low in here, what it would do is it would start to break this trend line that's been going on ever since, going way back earlier than the start of the year. I mean, way back in fact, if we go back into the 5-year, we can see where this trend line started. It started in July of 2016. Okay, that's where the trend line started upwards. And we've had a lot of dips all the way through this trend line upwards. We've had massive amount of dips. We've had, let's see, let me count them. 1, 2, 3, 4, 5, 6, 7. This is about the 8th one. This is about the 8th dip we've had. But we've never broken through that trend line upwards. And right now, if you plot that trend line from here all the way up across to here. You can see right now we're just about to the bottom of that trend line, almost. About 3.05, and we'll be to the bottom of that trend line. So we've touched the bottom. We touched it here, and we touched it here, the bottom of the trend line. We've touched it about twice before, the actual bottom of the trend line. So about 3.05 would be the bottom of that trend line. So we could go down as low as about 3.05, right? But that's it. That's it. Once we touch the bottom of that trend line, I very much doubt we'll break that trend, and then it'll start a motion upwards again. Once we touch the bottom of that line that's going up through here. Anyway, let's move on and let's talk about the U.S. dollar index today. The U.S. dollar is taking a little bit of a slump today. It's lost a little bit of value. It's fell down from 97, where it was yesterday, 97 and change. Let's call it. I think it was like 97.14, something like that. Anyway, it fell down to 96.45. So it's lost a little bit over a half of a penny, in the last day. Oh, here's the thing. This afternoon, what I got to check is the 3-month interbank lending rate, the 3-month LIBOR. It's been creeping up lately. I'm not going to put the chart on here right now. I'm going to do a show, right, on Italy and England, what's happening over there, and how that could bring down the entire system. I mean, this is ridiculous what's going on with Italy. Italy is in rebellion. I'll call it, they're in rebellion. The government of Italy is in rebellion against the boys in Brussels, the European leadership, the European leadership of the European Union. And they basically, the Italian government has said, no, we're not going to do what you want us to do. We are going to chart our own course, monetarily speaking, with our new budget. And we're not budging an inch. Right? This is the standoff, basically. The European Union said, well, the only thing we can do is basically fine you billions of dollars. But if they fine them billions of dollars, for crying out loud, that just makes it tougher for Italy. It just makes them go down quicker. That'll just slide them on that slippery slide to hell even faster. And so then over in England, it's starting to look like more and more that Theresa May's new plan for the breakaway with the European Union, a soft breakaway from the European Union, is going to fall to pieces. And in a couple months from now, when it comes due, that it's going to be a hard breakaway from the European Union. That alone could tear the financial system all to pieces. And so we got two of these calamities coming together simultaneously into a system that's already completely fragile, just about ready to roll over anyway, considering what the Fed's doing. I just do not see any way out, any way we can manage to get through all of this without the system going into this turmoil that we've been talking about for such a long time. Anyway, listen, thank you guys for listening. Like and subscribe. And we'll catch you in the next show. Bye-bye, guys.